Hey guys, I know bookkeeping's not everyone's forte. Weird, I know. But what if I broke it down so you understood it like I understood it? Let's go. Hi guys, I'm Caryn Silvius at Olive Branch Bookkeeping, and today I want to kind of go over some of the basics of bookkeeping. But before we hop into that, I just kind of want to introduce myself. I have been a bookkeeper for over 14 years. I quit my 9-to-5 job in 2020 and got into real estate with my husband. He has been a realtor for a few years now prior to me quitting, and he really kind of needed some help on the back end with contracts. And of course, as a bookkeeper, naturally I love contracts. As I started working on contracts with him and we went through transactions, I started to meet agents, and they kind of expressed to me that they don't track their income or expenses for their business, and every tax season they were kind of like, oh my gosh, I have no idea what to do or where to go or how to do it. So that kind of launched me into understanding that there was a need for people like us to help with their businesses and help them during tax season. Why I think it's important personally is because there's a lot of things we have to track, right? We have to track all of our lead generations, all of our softwares that we use, when we take clients out for meals and entertainment. If you track it per transaction, you can see how much each transaction costs you. So you know that you can't go lower than 2% on commissions, because you know that that's not going to provide you enough money to cover your expenses. It's super important to know what your profit and loss is, not just per transaction, but as a whole of your company, because if you're not profitable, then you need to figure out a new system and where can you cut some of those expenses. If you don't know how to look at your profit and loss, how are you going to know what to look for? There's just a lot of things that I think we're going to go over today that will help you prepare to be the best business owner for yourself and for your family. Okay, so before we get into the nitty-gritty of everything, I want to kind of cover like basic terminology. Some of the things that I'll be saying during this video may be new to you. So there's a few different things we want to cover. There's income and expenses, which seems pretty self-explanatory to you, right? The money that you get in and the money that you put out of your company. Then there's other things like assets and liabilities. A lot of people get these confused with income and expenses. They think they're the same thing, but they're actually not. Assets are properties your company may purchase. It might be websites that you guys own, furniture, technology, cameras, that kind of stuff. Those are assets. A liability is like a debt you owe, like a mortgage that you owe on the building that you purchased. It might be notes payable that you owe that you haven't paid yet. It might be bonds and stocks. So those are kind of the differences between those categories. Then you have something that's really kind of fun. There is cash and accrual accounting. Those are the different styles of bookkeeping that you can do. Most often, you are going to get a software that you are using to track your income, expenses, assets, and liabilities that is going to ask you, how do you want to track this? Do you want to go by cash or do you want to go by accrual? Most of the time, most businesses do accrual accounting. And what that is you can put in invoices to a customer before they pay it, so you can kind of track your cash flow before it hits your bank account or before your client pays you. And then you can track your bills that you pay to vendors before you pay them. And that kind of tracks what your expenses are before it hits your bank account, comes out of your bank account, so you can kind of know what your budget is that month. Cash is just income that you get in and expenses that go out. Nothing more, nothing less. You can't see into the future. You can't see what your cash flow looks like. You can't properly budget. So most companies go by accrual accounting. Those are the main things you're going to really need to know when you get into bookkeeping. Okay, so let's talk about income. I have quite a few different clients that are in the real estate profession. Not always does that mean that they're realtors themselves. They could be solo agents, they could be team owners that have multiple agents underneath them. I have transaction coordinators, inspectors, property managers, investors, of course. So there's lots of different clients that use my services that track their income. Most of the time, realtors, they don't track their income based off of invoices that they're going to receive from their clients, right? That's just their commission. But what I like to do is, as they open up escrow, I like to put in an invoice as a placeholder to see what their commission will be and when they expect to get that paid. So then we can kind of track their cash flow a little bit better and understand when they can pay their expenses, which we'll get into that next. But there's different sources of income that people can use. They can get their commissions. They have rental properties. They're going to get rental income. There's going to be flips. So if you buy a property and you spend a lot of money on rehab, you're going to track all those expenses, and then you're going to need to sell the property for more than what you purchased it, plus the rehab cost to have your profit. So you're going to make sure you put your profit in there as an income source. And then obviously transaction coordinators are based off of each one they do. Inspectors are kind of the same way. So there's different sources of income you can have in your account. But it's super important to track that. And then on top of that, one of the favorite things I love to talk about with all my clients is their bank accounts. I don't ever suggest just having one bank account. I always say 4 bank accounts. One for your income, like we're talking about, taxes, emergency funds, investments, and for your expenses. And why I'm bringing that up right now is because when you receive money into your income account, you're going to automatically want to put a set percentage, which usually is around 15% for most of my people, directly from your income account and save it off to the side for your taxes at the end of the year. This will help you so much not to stress during that dreaded tax season time. Plus, you want to save an additional, I always say 15%, but it's totally up to you, 15% off to the side in your emergency fund. As real estate agents, our market goes up and down all the time. There's times that we don't get paid for months and we just have to live off of our emergency fund. But if you don't build that up, how are you going to survive? So I always suggest to put money off to the side right away from there. It's super easy to track your income. If you have QuickBooks, you just enter it in as deals happen. And then when you close out a deal, you just mark it as paid. Super easy. Okay, so I kind of talked about this a little bit ago. I talked about expenses, so let's dive into that really quick. There are so many different things that we can consider an expense in our own business that a lot of people don't take advantage of. Obviously, we've talked about dues and subscriptions, about lead generating, about your accounting software. If you use it, maybe you use Adobe for marketing materials or Canva for marketing materials. We talk about all that stuff. But there's other things that you can consider, and I would always talk to your CPA if you have one. If you don't have one, I have a tax specialist that knows all the laws and regulations for each of the states in the United States, so he can help you truly understand if you can use this or not. But there's things that like realtors can use. If you get your haircut, you can probably write off 50 to 75% of that haircut. Not the whole thing, because you're not working 100% of your life, but you do go see clients and you have to look presentable, right? So you can write some of that stuff off. But again, talk to your CPA. That's just one of the things my tax guy has told me in the past as well. It's super important to track all of this stuff though, and it's even more important to track it all and tie it to specific deals or properties that you're working on, so you can truly understand if you're overspending and where you're overspending. If you just blanket it as a cost or a very generic expense, then you can't go back and say, okay, I'm spending $1,500 on lead gen when I really only wanted to spend $500. And how do I cut it out, and who do I need to cut it out? If I don't know the vendor I'm paying, or I don't know how much I'm paying a vendor each month, then it's kind of hard to determine where you can cut your costs. So it's super important. It's also very important when it comes to tax season, because then your tax specialist is going to have to help divide some of that up, right? So in 2023, they decided that meals and entertainment are only going to be 50% now, not 100%, which is kind of odd. But if you track 100%, then our tax specialist and myself can go back in and cut that cost in half to make it coincide with the rules and regulations that just came out. So it's kind of important to make sure you track it based off of specific categories. Okay, so now we've talked about income and we've talked about expenses and how they kind of tie in with your business. Another important thing that I want to discuss is how do you track those? If you're not using an accounting software because you're not ready to make that leap yet, how are you tracking that? Are you just looking at your bank account, your bank statements? Are you just trusting that the money's there when your dues and subscriptions come out and you have auto pays happening? There's a lot of different ways that you can track your income and expenses besides an accounting software. You can use spreadsheets, you can use paper records like your bank statements. There are a lot of pros and there's a lot of cons to all of those types and methods. And I think I want to dive a little bit deeper into those methods. So why don't you head over to my YouTube channel and check it out, because maybe I can give you some tips and tricks on those. All right, guys, I think that's about it for the basics of bookkeeping today. I just want to encourage everyone, whatever method you choose or however you do it, make sure you track your income and expenses, because if you don't know, you don't know. The worst form of tracking is not tracking at all. If you have any questions, feel free to reach out to me. I'm going to have more in-depth videos coming soon to the YouTube channel, so make sure you're subscribed to watch.